Okay, good afternoon, everyone, and thank you so much for joining us for the second Pearl Mutual BridgeAngels SME Clinic of the year. We are so happy to have you here with us. Just, for the sake of communication, my name is Oindamola Uni. I am a consultant with Pearl Mutual Consulting, and I will be your host for this afternoon. Before we continue, I should tell you a little bit about Bridge Angels. Bridge Angels is an expression of Pearl Mutual Consulting Limited. It is a business incubation platform that was established 3 years ago to help companies, especially those in agro processing and trading sector and beyond, to improve their exporting capacity and their ability to gain funding. I will be speaking more about this platform and how you can raise funds with Bridge Angels towards the end of the session. But for now, I would like to introduce you all to Olufunmi Adepoju. A true expert of the field, Olufunmi is the managing director of Pearl Mutual Consulting Limited. She is also a chartered accountant and a qualified chartered financial analyst, an expert in business incubation and financial risk management. Fumi has over 20 years of experience in financial management, wealth management, financial analysis, and financial planning. She has spent the past 11 years building up her own consulting firm that provides financial advisory, fundraising, and executive training expertise. She is a public speaker, agric enthusiast, and is very passionate about teaching, which is good because that's what she's here to do for all of us today. So, you can have the floor. Thank you very much for coming to speak to us today.
Thank you so much, Oinda, for that introduction, and good afternoon to everybody. We want to appreciate everyone that has taken the time to log on with us today, and we do hope that we are going to be having a session as well for question chats, so that Oinda can pick them, and at the end of this session, we'll be able to answer some of those questions. This is our second quarter SME clinic, and we felt again, based on some of the interactions that we have had in recent times, that it is important for us to bring out some very salient issues about scaling businesses, and we want to focus everything on financial strategies. There are many aspects of scaling businesses, and we will be discussing much more than financial strategies today. However, our focus is on financial strategy, and maybe as we go on, we are going to be able to, and at another period in time, we are going to be able to also focus on some other areas of scaling our businesses. But our focus today is on financial. Why is that? At the end of the day, so many of the errors that we make in different aspects of our business, it ends up affecting the financial position of our business. And when you say that a business has failed, what has most likely happened is that the financials has been wrecked. So if the financials has been wrecked, then it's a little bit difficult for the business to continue to stay afloat. Most times when businesses fail, you will find out that the technical knowledge of the owners of the business is still intact. The skills of the business is still intact. The market of the business is still intact. But most likely what has happened is that the financial position has gone to tatters, and therefore the business can no longer continue. And that is why we are very, very, we are very passionate about this particular topic, and we feel that it is important for us to talk about it again. Please and please, whether you think that the question you have is related to the financials of your business or not, like I said, every area where we make mistakes, at the end of the day, it ends up affecting the financials. Please let us bring out the questions. The purpose of the BridgeAngels is not just to raise funds for businesses, it's also to incubate businesses and to make sure that we succeed at the end of the day. Please, I look forward to a very good and engaging session. So let's go into the session that we have for today. Before we start talking about financial strategies, what do we mean by scalability, financial strategy, and then before looking at scalable financial strategies. So what is scalability? When we talk about scalability or being scalable as a business, in business it refers to the extent to which a business can evolve and adapt to changes over time. It also means that resources, operations, and overall business model must be prepared for changes and for expansion as we move on. If you have a business and that business is not scalable, it means that as more opportunities are coming your way as a business, you may not have the ability to rise up to that challenge as the business is growing. Or you may find out that you can see opportunities in your business and you cannot take advantage of those opportunities because the business is not scalable. So it is important that as we grow in business, that we keep on considering scalability. And you will see that I will be using the word growth and scalable as if they mean two different things, because it is possible that a business is growing, but it is still not as scalable as you want it to be. So when we talk about scalability, it can fall into financial and business strategies. Like I said, we cannot take all of scalability in one particular session. So we hope that next session, we are going to be able to go to business strategies and scalable business strategies so that we will understand fully what it means. All of us, if this was a physical class, if I were to ask all of us, how many of us will want our business to grow and to maybe double the size in the next 2 years or 3 years? I'm sure practically everybody will raise up their hand. In fact, if possible, somebody will tell me, Fumi, looking at the opportunities that are available in my industry, I can actually double this business in 1 year, but it is just that there are challenges. So what are those constraints that stop us from being able to scale our business up as opportunities arise? Those are some of the things that we want to be looking at over the next 2 or 3 quarters that we have left in the year. So, but starting today, we are going to be looking at financial strategy. So when we talk about financial strategy, it is the approach used by the management of an organization to ensure that the assets and liabilities are enhanced in such a way that we achieve our projected or proposed objective. Every business here has an objective. And maybe to make sure that this is an interactive session, can I just say that in the chat, can you please help me write what's your objective for this year? When you started this year, what was your business objective? Can you please put it in the chat? I'll give us 1 or 2 minutes to do that. 1 or 2 minutes to put our objective for the year. Objective for your business for the year. Please, can you put it in the chat so that we are all together? I'm waiting for some responses. Do I have people there? Our objectives for the year, just put a few, nothing specific, just some generic ones. Objective. Every business has an objective. Our own objective coming into this particular year is to make sure that we help more SMEs to have access to finance. And in addition to that, we also wanted to be able to scale our business and double our operation practically. And that is what our objective has been for the year. Yes, we can hear you.
Yes,
can you hear me?
paused for a little bit, but I think you're back.
All right, sorry, because it rained in Lagos today, even our fiber network in the office is not working, so I'm using my phone. So please, Oyinda, once you think I've broken off, please just let me know immediately. Thank you. I'm seeing the objectives now. Expansion of my farmland, that is from Gillian. Thank you very much. Mr. Olufunmi Adepoju, you are welcome. He says objective is to acquire assets of our own. That means that maybe they are leasing some of the things that they are using right now, but they want to buy more assets. And we normally say that the level of assets that an organization has will determine their income generating capacity. Financial strategy, how sure we can assets of the organization to be able to generate. So when we're talking about scalable financial, another response from Mr. David Olufunmi says to provide affordable alternative power supply to Nigerians. Thank you very much, and we are looking forward to that. We would also like to use your services for that. So scalable financial strategies are talking about strategies that businesses put in place in the management of their assets and liabilities in order to evolve and to be dynamic. So the key word that I would like us to learn from there is dynamism, being dynamic in everything that we do. Thank you. I think it was my internet that was not making me to see people's response on time. G-Money says objective of G-Money is to acquire products, thereby enabling people buy products at low prices, bridging the gap while building great teams to solve solutions. Thank you very much. To expand food processing line and able to get cheap finance. Thank you very much, Mr. Olubanjo Ebenezer. And the last one I'm going to be able to read is from Anu Bogba. It says to set up a cashew nut processing plant for exports and for the African market. These are very, very good objectives, but we have to make sure that we are using the right strategies, that we understand our finances. Like we've said, if we make mistake in any area of the business, it affects finances at the end of the day. If you employ the wrong people, it will affect your finances at the end of the day. If you don't manage your expenses, it will affect your finances and your business at the end of the day, and it can lead to business failure. So that is why in the next quarter, we will talk about other business strategies as well. Let's keep the comments coming. I'm going to be reading them from time to time. Let's go forward. I'm not going to be using very busy slides. You're going to just see a lot of pictures. And this particular sentence here is something that I want you to put down in your notes. And, you know, from time to time, remind yourself, your input determines your output. What you put into the business will determine what you get from it. Like the IT people like to say, garbage in, garbage out. So it is important for us to ensure that we do the right thing in business. Now, what am I trying to pick from this in the topic is you're not going to get the right results. And one of the key things that I want to first of all point out is that as businesses, as SMEs, let us improve on our structures. A lot of us, we focus so much on our strength, which is our technical knowledge. We forget that there are so many other things that support the business. Financials, the finance department supports your business. Legal supports your business. Risk management supports your business. All processes, daily operations and processes support your business. When these things are not okay, no matter the amount of technical knowledge you have in that business may not likely succeed. So it is important for us to have very good structures around our business. Like I said, all the structures that we need to have around our business, we cannot discuss it in one day. So we are focusing on financing today. So the first question I want to ask you as a business, do you have somebody that does the financials of your business? There are businesses that we work with. When I call them and I say, what is your turnover from January till date? At the tip of their finger, they cannot give me that information. That is not a process, or that is not a system that will support you for success. Even if you cannot employ an accountant full-time, have somebody that comes at least once a week, depending on the kind of business that you do, or once in 2 weeks, to put your records in order, so that by the end of the month, you can say, this is what we have done for the whole month. If at the end of the month, you cannot tell yourself what you have done in that business, you are just doing what your back or baralugi, that means you are just using your body, you are just using your energy for no reason. You have to be able to, on a monthly basis, put a figure to what you have done. Now, somebody will say, for me, that is chicken change for me. In our business, we already keep that information. Now, so if you already keep that information, my question is, what do you do with that information? On a monthly basis, do you sit down to say, where did we get it right? Where did we get it wrong? If your answer is you don't have, so what I'm saying is that on a monthly basis, there must be a performance review session. These things, they seem as if they are taking our time, but they are important. Businesses that are big, businesses that are doing well, these are the things that they do that makes them to be successful. So we ourselves are small businesses. Remember, I am using the word we because I am one of the small businesses in this country. So, but there are things that my business started doing 2 years ago. For the past 2.5 years, to the glory of God, there is no month that has gone by without us actually doing, what's it called, monthly performance review. We do quarterly performance review. We do annual review. And there are questions we ask ourselves. Because if you do the same thing that you did last month, this month, you are going to get the same results that you got last month. And if the last month result is not satisfactory to you, it means that this month you must do something different. There is a saying I like to say to my staff members, doing the same thing and expecting a different result is hallucination. You have to do something different. So if you want your finances or the finances of your company to change this month, it means that you must do something different this month. Now, we are doing this at the end of the month. We're doing this at the end of June. So for July, set your objectives. And when you set the objectives, make sure that you do something different in that month, in your financial strategy. That is the only way you are going to get something different. Know where your money is going. Know where the expenses are going, so that at the end of the day, you can get a different result. Otherwise, you're going to still get the same results that you got in June. Thank you very much. I'm going to go on. Please, if I'm saying something and you want me to expand this, they normally give us a maximum amount of time. I'm not allowed to spend more than 1 hour or 45 minutes on this discussion. So please, I may not be able to say everything that you need to hear, but I would expect that you will put it in the question. Mr. Adesina said that our objective is expansion and to be able and to have a standard factory to meet international market requirements and achieve good profit margins. Mr. Anuboba also still added another one, to get finance to set up the cashew factory. All these things that we want to achieve, they are things that are actually, I would like to put it this way, chicken change, as in they can be achieved. But it is what we have on ground sometimes that makes it difficult for us to get the access to finance. It is what we have that makes it difficult for us to get the attention of the international people that we are trying to get their attention. I've worked with several SMEs to try and get grants, to try and get finance internationally. 90% of the time we are not successful. And the reason we are not successful is because of the structures around our business. They don't doubt that we have the, technical know-how for this business. It's the structure that we are creating around our business that is often not right, that makes us not be able to get the access that we require. So I hope that today we are going to be able to work on some of these things so that we can get better results at the end of the day. Thank you, everyone. All right. So why are we talking about scalable financial strategies? Why are they important? And you see, like I said, I'm not going to be bugging you with very, very busy slides. I'm just going to leave you with words that you will never forget. Remember the first one, your input determines your output. And this one is also related to it. It's what? What you nurture grows. What you nurture grows. Whatever you are nurturing, it grows. Now, for those, a lot of us here are involved in the agri sector. And even those of us that are not involved in the agri sector, this makes sense to us. When you plant something, you have to water it for it to grow. And that's exactly what we're talking about here. When we say what you nurture grows, if you put enough attention and energy in your business, you should get good results. And somebody will say, Fumi, but I'm putting good result. I'm putting energy in my job, in my business, because it is not possible. It is not because it is not achievable. It is often because a lot of times we as SMEs, or let me say as entrepreneurs, we are over busy. That means we are not, we are not delegating the activities that we should delegate. Delegation. So this is what I want to put here. Delegation. You need to learn the art of delegation. When you delegate, it becomes easier for you to be able to do strategy. As a business owner, you must ask yourself, how many hours of my month do I spend on strategy? If you are spending less than 10 to 20% of your month on strategy development as an implementation as a business owner, and you find yourself involved more in operations day to day, that means that the structure that you have created around your business is not yet correct. There is so much more that you need to be able to do as a business owner. As a business owner, you must be able to step back from time to time to say, how are things going? Be your worst or your best critic, looking at yourself, looking at what you're doing, and see whether you're getting the results that you actually want. If not, you need to, from time to time, retweak things and say, this is what we want to do. This is how we want to do it. And this is what it's not going to be. Let me give you an illustration. In our business, I mean, like Oyinda introduced, I'm a teacher. So one of the major services, like she's going to be talking about later, that we offer is human capital development, and that is training. And one of the problems, one of the things that we wanted to do from like 3 years ago, we wanted to have an e-learning platform that will make it easy for people to learn from us via the internet. And for one reason or the other, we tried several strategies, it wasn't working. But at each point in time, we didn't give up. And because we didn't give up this year, one of us was able to discover a platform that we could use and just adapt and pay little money, and we'll be able to use it for our e-learning platform. And that is what we finally were able to do. So we didn't give up until we were able to achieve it. And we kept on looking at different strategies. We wanted to build from scratch before. We wanted to use another person to do it before. You know, we did try different things and it didn't work until this year when we finally got the one that worked. So you must understand, if you are spending too much of your time on the operations of your company, you are not creating, you are not allowing your business to be scalable. As long as you are doing something that is always operational, it's not going to be easy for you at the end of the day to scale up your business. I want to, there was something that I learned from a particular training that I attended a few weeks ago. They said, as an entrepreneur, there are 3 functions that you have. Number 1, you are a technician. Number 2, you are an entrepreneur. And number 3, you are a manager. And the individual that took this class said, if you are not able to do these 3 roles together, your business will suffer in one area or the other. And remember, it will eventually affect financials. What do we mean? A technician means that you have technical knowledge of the work that you're doing. Number 2, entrepreneur means you are for strategy development. You must be good at strategy development. Number 3 is that you are a manager managing people. So if one is missing, if you are not doing everything very well, it says that at the beginning of your business, you are a technician, means you are the one doing the day-to-day operation. You are the one with the technical knowledge. But as you go on, you must be able to leap from just being a technician to being a manager, managing other people to do that work. Because if you continue as a technician, you're not going to be an entrepreneur, which is where scalability dwells. Where does scalability dwell? In being an entrepreneur. What does being an entrepreneur mean? It means you are good at strategy, seeing what other people are not seeing in that business, seeing what other people are not seeing in that market, seeing opportunities that others are not tapping into. So if you are not balancing these three roles together, a technician, you must continue to be a technician. That means that the day somebody is not available, you can quickly jump into that role and do it. But you should not continue on a day-to-day basis as a technician. You must leap to being a manager. Please, I want you to engage with me. Please ask questions. If you have issues in your business, please let's ask questions so that we can advise each other today. So why are financial strategies very scalable financial strategies very important? Number one, if you are able to scale your financial strategies, it will lead to increase in market share. A lot of us, if I'm to ask here now, we are all SMEs. That means we are fringe players in our industries, including myself. For you to scale, you need to begin to develop strategies that will make you to be able to move from being a fringe player into a market leader. You need to begin to, it helps you to build alliances. One of the things that we try to do on this platform, and please, if you are here, please, I want you to drop your name and your email address, drop it, and what you do, drop it in the chat, so that maybe there is somebody who needs your services. They can pick it up. We encourage B2B services, so that if you are doing something that somebody else is, they can pick it and then be able to get in touch with you. Any information you want to put that you want to be able to reach you, please put it on the chat so that people can reach you, what you do and everything like that. So that if there's anybody that needs your services on this platform, they can reach out to you. It increases your competitiveness, like we said. And then, of course, there is no way, especially in the new normal. Remember, the world has changed from what it was before 2020 pandemic started. So now, anything that you're going to do, please mark my words, you have to use technology. So if right now you are maintaining your financial information, you are maintaining it on, what's it called, Excel, it is time to buy a software. You can talk to us in Crown Mutual Consulting. We can recommend what's it called to you, a particular, what's it called, software to you. We won't charge you if we're just recommending. It's only if you say, come and implement, that we can say, okay, we'll charge you something small. But if it is just to recommend, we can recommend. And for free, I can tell you, please, if your business, what's it called, financial software, it's very costly. I tried it, I could not sustain it. It's better for you to buy a QuickBooks or one of these other packages that you download on a system, and you will start from there before you migrate to the online one that is quite expensive, and they'll keep changing their price on you every month or every year at least. So these are things that we need to bear in mind. So when we have scalable financial strategies, it will include the introduction of technology. Like I was using our training business as an example. Now we have fully implemented online training platform. That means scalable, and other businesses will be able to reach us easily. It will lead to it will multiply your income and multiple sources of revenue, as it were, and lead eventually to expansion. I believe the goal of every business here, no matter what we're saying, our ultimate goal is to expand, is to scale up. And therefore, it is important for us to use the right strategies as we go along. Please, if there is any question, I keep saying, if there's any question that you want to ask, please go ahead and ask in the chat. My team members, a lot of them are also here, and they will pick it up from there. And if you know a friend of yours that you think this will be useful to you, you can also send them the login details so that they can join us before we finish today. Thank you, everyone. So what is the difference between scalability and growth? I will talk about growth first. Growth is when you increase, that is growth. But there is sustainable growth and there is unsustainable growth. There are some things that you can do and your business is growing, but you find out that that business might not be sustainable at the end of the day. At some point, you just see that businesses crash. If there was enough time, or we were in a physical class, and I told some of us to give me examples of companies that you knew that were growing before, and as all of a sudden they crashed out of the market. I'm sure even in your industry, you have a lot of examples like that. So there is sustainable growth, there is unsustainable growth. So what is scalability? Scalability is still growth. But the difference between scalability and ordinary growth is that scalability is talking about intentional growth. Intentional growth. Intentional growth is growth that is intended. Let me use that word again. That is intentional, that is planned. That's what I'm looking for. Planned growth. That means you're not just growing anyhow. What I'm trying to say is that if you say, for instance, as an organization, we want to increase our production. I have a lot of people in the cashew industry, so I'm going to use cashew as my example at this point in time. So if you say, oh, we have been processing 2 tons of cashew every month, we want to go to 4 tons of cashew every month. Now, what do you need? What are the processes that you need to support that increase? If you just increase the production, you will meet it, but it doesn't mean that it will be sustainable. So the key word here is sustainable growth, scalable growth, or scalability is talking about sustainable growth, something that is sustainable. Because as you're trying to grow that capacity, it means you may need to increase in human capital. You may need, last year we did human capital, but I think we are going to bring it back again before the end of the year so that we remind ourselves again, and our platform is also growing. So sustainability, it will require you to think of, okay, the equipment I have, is it enough? What percentage of my capacity am I using? What do I need to support? You might have enough equipment, but is your power supply enough? Do you need more power supply? So for instance, I like using our company as an example because we are also an SME, and all the pains that all the SMEs on this platform are currently going through, we ourselves, we experience those problems. So at the beginning of this year, we said we wanted to grow, and part of what that meant was that we needed to increase staffing. Now, when you increase staff, the first thing we noticed was that immediately we increased staff, our, our inverter that we used in the office before that never used to go down, it started going down, which meant that the capacity of that inverter was not enough to carry all of us in the office again. So as you are growing, there are other requirements that you will need. So you have to put it into consideration so that at the end of the day, you are growing in a sustainable manner. I mean, one of the things that we needed to upgrade this year were the laptops, the systems that the people were using, the staff were using. Now, that's a lot of pain for the organization. That's a lot of money. But if we now insist, we can't buy laptops, just go and repair the ones you have or the ones that are already in the office. And they're already saying, madam, these laptops are not up to date again. And you want to force them to keep using it. What happens? It affects productivity, it affects morale, it affects a lot of things. At the end of the day, what does it affect? Financial. So like I said at the beginning, when we start, all the other aspects of our business affect financial. So we must remember that whatever we are doing, we have to be intentional so that our financial strategy will work. We must not be penny wise, pound foolish. We must not be penny wise, pound foolish. We must make sure that what we're trying to do is not, there's a difference. Let me also bring this out. There's a difference between cost reduction and cost management. Cost management. Cost reduction is reduce cost at all costs. That means we don't want to spend money. So reduce expenses to the barest minimum. Cost reduction often kills businesses. Cost reduction often kills businesses because even the expenses you need to make to be able to get access to better revenue, you will not make it. Cost management, on the other hand, is efficiency, looking at the cost benefits of all the costs that you have. That means costs that are necessary, you will make them. And sometimes it will be high. But because it is important for you to remain in business, you will incur that cost. So please, one thing we must take away from here, one of the things, I'm sure there are so many things that we are taking away from here already, but one of the things we must take away from here is what? Cost management is what we must practice, not cost reduction. Cost reduction is injurious to our business, while cost management is fine. I'm an accountant, and people always feel that accountants they are Ijebu, they don't like to spend money. And I tell them my own kind of accountant is different. Because in addition to being an accountant, I'm a financial analyst. And from the financial analyst end, I know that if you don't spend the money you need to spend, you may not actually have the results that you need to have. Thank you very much. Now, there is a difference between accidental growth and intentional growth. This table that I have here, I'm not going to be able to go through it because of my time, is for us as individuals. This is not for the business, because it has to start from us. We ourselves, our level of knowledge that we have will determine what we can give to the business. And therefore, it is important for us to, first of all, improve ourselves and intentionally grow ourselves. And then we can use some of these things for the business as well. And you know, one of the points I can bring out here says, often learns before mistakes. The way you can only achieve that is if you are planning. You will make mistakes. Don't get me wrong. We will all make mistakes. This year, I've made mistakes in this business. I think last year, I made some mistakes in last year that I'm seeing the impact of it this year. So, but there are some that we can avoid, and that is by making sure that we have very good strategies and keep reviewing our strategies. And what is not working, we change it immediately. Like I said, the slides will be sent to us. So preparing for growth. When we are preparing for sustainable growth, it means that we are preparing for scalable financial strategies. So like I said, for today, we are focusing on just the financial strategies. So what are some of those things that will help us to be scalable as a business? Number one, there must be proper budgeting. Proper budgeting. Budgeting is something that we must not let out of our business, especially for those of us that are in production. Anything that involves production, processing, you know, and all those kind of things, you cannot do without budgeting. Budgeting is very important. And as you can see, I put there strategic and tactical. So when we talk about strategic, we're talking about long-term view. So you have a long-term plan. 5 years from now, where will this business be? Have that plan. Work back from that strategic plan, work back into your tactical or operational plan. If you're just planning as the day goes by, you're going to be focusing on short-term goals at the expense of long-term goals. So it is important for us to have short-term goals and long-term goals. And we must make sure that none will affect the other. We must balance them together. So it is better to develop your 5-year plan and work back from there. Work back from there so that we can get the best results today. So that whatever strategies you are developing today is in line with what you want to achieve 5 years from now. If, for instance, I want to be a doctor, let's say I'm just in secondary school and I'm just trying to determine, I say 5 years from now or 6 years from now, I want to be a medical doctor. It means that today I must have taken subjects in secondary school that will make it possible for me to be able to enroll in university to be able to do that particular course. And I must go through the lessons and the classes that will qualify me 6 years from now, maybe from Unilab, to graduate as a doctor. So that's exactly what we're talking about. So in the same vein, our business must be like that. We must be intentional. Remember, the key words that we are taking away from here today: sustainable, intentional. We have to be intentional. Every day of our business is not just, we have woken up today. What are the challenges of today? No, let us be intentional in the way we carry out our business. Number 2, prioritize expenses. Remember, I did not say that you should reduce your costs, but determine which one is more important at that particular time. Like last month, there were 2 things that we wanted to do. We wanted to join a particular platform that would bring job opportunities to us. We also needed to upgrade our inverter. And I told my team members, I said, right now, to the glory of God, in fact, the amount of work coming to us, we don't even have enough manpower to do it. I said, so yes, we want to build more market, but right now, the one that is affecting us the most is this power issue. So let's solve our power problem. Next month, we will solve our marketing problem. It's not because marketing is not important. Don't get me wrong, but you have to know what is important, especially where there are limited resources. You have to make sure that you are using your resources for the best alternative, you know, that you have to do, opportunity cost that you have to do at that particular point in time. Contingency planning. Contingency planning is planning for the rainy day. You have to plan for the rainy day. And when I say plan for the rainy day, in your financials, you plan for the rainy day. That means I will encourage us to have what we call reserve accounts. Reserve accounts. Reserve accounts are accounts that on a good day, you don't touch. If possible, don't have online banking on it. Don't have ATM. You can use this idea in your personal life. You can also use it in your business. Don't have online banking on it. Don't have, what's it called, ATM on it. Make sure that the access to that account is not so easy that will make you to spend the money easily. And when you are using that reserve account on a monthly basis, no matter how tough it is, even if it is 100,000, 200,000, 50,000, move and sweep into that account. You are using it to build up. Don't keep on, because you see us as what's it called, SMEs, all the profits we make in our business, we tend to plow everything back into business. So the day that business is going to fail, it's like we lose everything, God forbid. We have to prevent that from happening going forward. And one way you do that is by having contingency plan. Make sure that if you are in maybe commodity trading, for example, you traded this month, what is your total profit? Your total profit was 400,000. Don't put the whole of the 400,000 back into the trading next month. Remove at least 100,000 into an account, and when that account builds up to a point, put it in a fixed deposit that will be earning, even if it's 1%, 2%. Do that with that account, so that at the end of the day, whenever it is time for you to need money, urgent money, that is rainy day money, even if you need to approach a bank for money, when you go to a bank, you say, I need 5 million, and they say, how much do you have? And you say, I have 1 million. They take you more seriously than if you say, I don't have anything. So this is what contingency planning is all about. And this is what allows you to grow. You grow on your own terms. It gives you the opportunity to grow on your own terms. This is what contingency planning means. Then lastly on this slide, I have understand your need before borrowing. A lot of us, I've seen so many and I've helped so many SMEs get out of difficult situations with banks. Why? They didn't really fully understand their requirements. They took a short-term loan, but what they wanted to use it for was for capital projects. They wanted to use it to buy assets, long-term assets. You're not going to be able to make it. Long-term assets, we call it cash flow lending. Why? Because it's going to take time for that thing to be generating cash flow over a period of time before you can get the money back. So it must not be money that somebody is telling you to come and pay once. What do you need money for? Understand your need. Because all the time, it's not all the time that bankers give you the right advice. Please note that down. Sometimes the bankers they are being selfish. They are looking at meeting their own targets. They have targets on loan. So if you say you need the loan, they will give you the loan. but it may not necessarily be what you need. So it is important if your business, if your idea, your objective is to grow your business. I don't think there's anybody that goes into business and their objective is not to grow their business. So if your objective is to grow your business, understand your need before you take a loan. I don't have enough time. I can give you several examples. Several examples. It is better, you know, Yorubas will say a scarred skin is different from fresh skin. So it is better for you not to even have the scar, if preventable, than to have the scar and be looking for the oil that will help you to smoothen that scar into your skin. I'm sorry, I can see a lot of comments, but I want to just finish up my slides because my time is almost up, and then we'll go to all those comments, and if there are questions there, I'll take them. This is the second slide that I have on scalability of financial whatever. Manage your taxes. Now, when I say manage your taxes, please, I'm not saying you should not pay your taxes. Please, let us stop reducing our revenue because we do not want to pay taxes. It is backfiring on us. If you don't pay, if you reduce your revenue because you don't want to pay your taxes, when it is time for you to, you are saying, Funmi, please, there's this grant, please help me present my work. They have minimum turnover they want you to have met before they give you that grant. You will not be a candidate. You will not be eligible for that money. So if you don't have a good tax consultant, and not all auditors are good in tax management. So if your own auditor is not good in tax management, it's either you change your auditor or you go and get another tax consultant that can advise you. There's a difference between tax evasion and tax avoidance. Tax evasion is when you are trying to do the wrong thing. You don't want to pay government what is due to government. Whereas tax avoidance is where you look for ways of ensuring that you minimize your tax. We pay taxes, but we minimize our tax. And there are ways of doing it. But I will never reduce my revenue as a way of reducing my tax, because at the end of the day, it is me, the business, that it will shoot in the leg. So please, you can manage your taxes by buying more equipment. That means government will, we have what we call tax allowable expenses. I don't have enough time to go into it, but if you take this slide and you talk to anybody that is good in tax consulting, they will tell you benefits to your employees. There are some things that instead of just keeping the money, give your employees some additional benefits. HMO, give them. You will say, that our employer is interested in our health. Yes. So it is a win-win situation. You're interested in their health, but it also pays you because it is a tax deductible expense. So there are ways in which we can manage our taxes, and let's talk to our tax consultant about that. So I'm bringing that out because I don't want, and it is linked to what I called managing your performance. Please, if you have been operating your business for 5 years and your business is not profitable, the time you want to go to an international organization to get funding from them, that's when you will know that it is important. It is very, very important, my people, for us to be profitable. So you have to manage your expenses so that you become profitable in your business. Some of us, we are profitable, but our auditor helps us to turn our finances around because we don't want to pay taxes, and we keep saying we are making losses. Yes, government will not collect money from you, but you too, you won't get money from a bank. So please, it depends on what your objective is. If your objective is financing, you need to make sure that you do the right things before the time for seeking for financing comes, so that you are ready like a beautiful bride, like I like to call it, and you are, you are appealing to the lender. The key is sustainability. We've talked about that before. Making sure that we grow sustainably. Sometimes there are some things that somebody will bring. About a month ago, a colleague of mine and I, we were supposed to do a response to a proposal, and we looked at it. We looked at the work we had on ground, and we said, let's let it go. Because yes, it is something that we could apply, they could call us, but do we have the capacity to do it? We agreed within ourselves that we didn't have the capacity, and because of that, we let it go. It's better to grow steadily to a particular level than just running, and at the end of the day, you will not be able to achieve a sustainable growth. There are so many people that do the kind of thing we do, but they are out of business. Why? They started very fast, but they didn't create the structure that was needed for sustainable growth. The last point there is another thing that we need to note, and that is processes. Making sure that we document our processes. We document the way things are done, so that even if somebody has to leave the organization, it doesn't mean that that business is not going to go on. And we need to also begin to come to the mind of another thing, that is succession planning. If this business, ask yourself, if you are not in the business anymore, the business that you're doing right now, can this business be continued by somebody else and it will be okay? If the answer is no, you need to start working on succession planning, because that means that the business is just all about you, and it shouldn't be like that. I hope that with some of these points that I'm raising today, I'm encouraging us to make our business a little bit more sustainable. All right, these are some of the other things that we can bear in mind. Leverage automation and outsourcing. We have a lawyer, but we don't have a full-time lawyer that comes to the office every day. We have a legal counsel that we maintain. We have auditor. We have different roles like that, that we know that if we were to make those roles full-time, it will cost us more. So what we do, but we don't want a situation where we don't have those services. So we outsource and pay less to be able to get better results at the end of the day. So you can outsource. You can outsource some of these things, making sure that we have a good value for money system, ensuring that we use our funds very, very well to get the best results. Obtain and leverage capital. All of us want to make sure that you understand what you want to use the capital for. And by the time the capital is coming in, it is deployed correctly. Please, you can reject offer letter. I repeat, you can reject offer letter. If a bank gives you an offer letter that will not pay you, it is better for you to still be at the former level that you were on and still be looking for the right financing than to quickly take their own money and then they put you in it's coming and be a quarter to, or what do I want to say? All these are our slangs, sorry. I'm making it as Nigerian as possible. So we need to make sure that we're using the right type of capital. Don't take hot money. Don't take hot money. Some of us go and take money from financial institutions, microfinance banks, or even individuals and promise them 40% return, 50% return. My people, in today's Nigeria, which business are you going to do that are going to get 50% return? There are very, very few of such opportunities in Nigeria. And even if you are going to get those kind of opportunities, before the opportunity materializes, inflation will happen. Different things will happen that will eat into that 50%. So please, let's not, because we are so in need of money, begin to take funds that at the end of the day will come back to haunt us or even make our business to fail. These are very, very important things that we must bear in mind. Recruit and nurture top talent. Recruit and nurture top talent. It's best for you to also make sure that you surround your business. At the end of the day, it will be interpreted into financials, because if you don't have the right people in the right places, it will have negative impact. This last one is what I've been saying over and over again. Build a solid foundation. That is the structure around your business, the culture, the processes. I mean, there was somebody that did a training for us, as a facilitator about a month ago. And by the time she finished the whole process, she had to come back to me. She said, wow, I need to come and learn from you. Your business is so structured. Meanwhile, when I review myself, I feel I don't have structure. But structure is very, very important. And this structure must be scalable too. As you see that your business is growing, you must give room for expansion. One of the things I always say to people, if you think you need 3 people in your business, why not have 4 people? So that there is room for growth. But if you need 3 people to do your business and all the staff you have is 3, if another project comes immediately, you will find out that you will not even be able to meet that requirement at that particular time. Is your business scalable? It's the question that we need to keep asking ourselves. As I begin to wrap up, these are some of the things that, or questions that we must ask ourselves, or things that we must ask ourselves as we scale up our business. Number 1, understand your market, optimize your position, check your finances, scale your strategies on paper. Make sure that you have the strategies that you want to implement on paper. Do key homekeeping. Make sure that you are, we always have monthly performance review in our organization, and the last thing I normally, I'm the last person to present, and when I do my own presentation, the last thing I do is housekeeping. Let's talk to ourselves. Where are we not doing things correctly? Let's ask ourselves that question. What can we do to do better? So that at the end of the day, we can scale our operations, we can scale our team. It is very, very important. A lot of times we feel, oh, I need to milk my staff for the highest opportunity. Sometimes when you overwork people, it's a challenge. They get burnt out. And when they get burnt out, I'm talking from experience. When they get burnt out, they may not even be able to do the work. Even if they still love you, they just can't do the work again. So it is important for us to ensure that we're doing things in the right way. Why do these strategies fail? I think I'm down to my last 3 minutes now. Scaling before perfecting sustainability. Maybe when you're trying to expand your business without fully understanding the business, let me use those words instead. Scaling processes to meet growth. That means you are doing catch-up. When we are playing catch-up, you must think ahead. There's a particular project that we're trying to work on now, and I spoke to our HR officer and I said, I think we need to bring in one more person. And he was looking at me as if, we just finished employing some people. Why are you talking about bringing? I said, with this kind of project, I'm thinking ahead that everybody's going to be overworked. Why don't we just bring in one more person to make sure that we have enough capacity to grow? So you should not be scaling to meet your expansion. You should be, expanding, and your growth should be coming to, I don't know how best to say it. You must have room for more than what you are doing at that particular time. If you have only enough room for what you are doing at that particular time, you will definitely, with time, run into issue. Proper time management and leadership management. Remember what I said, an entrepreneur is a technician, an entrepreneur, as well as a manager. A manager, and when I'm talking about manager here, I'm talking about leader. Someone who is a leader, not just instructing people all around. That's the people they call manager. But a leader is someone who leads by example and is also willing to understand the situation that their team members are going through at every point in time. I think I met my 1 hour. Oyinda, right? I tried. Thank you very much. This is the little that I can say. I haven't looked at the chat. I'm just going to be looking at the chat now. We'll talk more as we have questions. Yes. Oyinda, I hand over to you.
Thank you so much for the session. I think we all learned something new today, hopefully more than 1 or 2 things new today. And I'm sure that some of the SMEs here will, carry it forward, take those lessons forward in their own businesses. Okay, so we're just going to have a quick question and answer section now, where I'll ask OA some of the questions that came up from the chat, as well as the registration form. Some people asked questions there as well. Just note, if your question didn't get an answer, or if you have another question, you can always just raise your hand, or even unmute yourself if you would like to ask a question now as well. But in the meantime, I do have a few questions here, OA, for you. Aneti Ekanem, so sorry, I completely butchered your name, asked if you could please explain what exactly a business structure is, because you spoke at length about the importance of having structure. She or he would just like to know what exactly business structure is.
All right, yes, thank you very much. So when we talk about business structure, we're talking about the way I'm looking for, I don't want to use the word structure to explain structure, but what I'm saying is, what we mean by that is how your business has been organized to create an environment for success. It starts, first of all, from your organogram. Do you have a business organogram? So if you are the MD, for instance, and you are employing me today as an entry-level person, your job is, your office is the first place that I will work. Am I able to understand my path to growth? That means I'm an entry-level person now, so what am I called? How many years does it take before I get promotion? How many years? So you must have like a staff handbook. That's part of your structure. How you organize your business is your business structure. So what are the processes? So now I'm coming to the office, I'm told that I am a financial analyst. Then I get to the office, I sit down. Then the MD calls me and says, take this 1,000 naira, go and help me buy rice from a Tasty Fried Chicken. That's not a structured business. That is a fly-by-night kind of business. When you talk about a structured business, it's a business that everybody has their role. Everybody that is coming in knows what they are coming in to do. So the people that you are employing, are they just all there and you just call any of them? Yeah, you today come. You are the one that is going to go to my house to go and clean my house. Do you know people really do that as business owners? And this is why small businesses have a problem. So it is important for you to create structure when you employ somebody as a junior technician. I can see some technical people here. If some IT people here. Now, if you employ somebody as a junior technician, let that person be that work. If you need somebody to send on errand, then employ an office assistant as well. But when you call somebody a technician, but it's the person that is going to be buying your lunch every afternoon, once in a while, I'll be going, sometimes I'm going to my car. I will meet one of my team members. They will tell me, let me help you carry your bag. I will insist, no. It's not because they cannot carry my bag, but I just want them to know that that is not your work. But if my office assistant meets me on the way and says, can I carry your bag? If I feel like, I can give her to carry it. So these are examples of structure. So create an organogram. Let people know how they grow within the organization. Let them see that there is a future for them in the organization. Then processes. What are the processes around each of your area? What does it take for somebody to take leave? Do they know when they can take leave? How many days of leave are they entitled to? If I want to get approval for something within the organization, what is the process you have put in place? All those things is what we call structure. Do you know what is called corporate governance? That's another thing. We talked about that, I think was it December when we talk about corporate governance? Those are things those are part of structure. So business structure is how you organize your business, which will enhance your probability of success. I hope I've been able to answer that question. Over to you, Winda.
Okay, thank you, OA. I just have a few more questions. We're not going to go too crazy, but I do have another question here from Olumide Sholadoye, who asks, what factors can aid intentional growth? Please, yes, so he would just like to know what factors, if you could just list a few that can help with intentional growth.
Okay, thank you very much for that question, Olumide. Yes, so when we talk about intentional growth or what factors can aid intentional growth, I think I actually, I explained intentional growth to be scalability at the end of the day. So whatever factors can aid scalability is what can actually aid intentional growth. So the first thing is be aware. be aware. So I think what today's meeting or seminar would have done is making you aware that you need to grow intentionally. Number two, where are you trying to grow? Those are some of the factors that will help you. Where are you trying to go? Understand where your business is going. Number three, making sure that you spend quality time on strategy development and have a feedback process for yourself. That means from time to time, there must be a time when you are reviewing what you have done so far and you're able to score yourself. This is how well we are doing. This is why we have not been able to do this. And this is what we need to change forward, change going forward, and then you change it. So you're being intentional, slowing down. Some of us every day we just wake up, bam, we go into business. Don't just go into business every day like that. Take a minute to reflect. What have I done today? I mean, any week that at the end of the week, I ask myself, did I really achieve much this week? Any week I feel like I didn't achieve much, I scold myself. Then I sit down. My own weekend is my strategy time. And my office, my team members, they are used to me. I'll just come on Monday with a new brainwave. They'll say, hey, she has come again. Then if you just want to just do me, just give me public holiday. Public holiday, the best time of my year is Easter period. Why? Because the public holiday is constantly Friday and Monday. So because of that, weekend, I don't think there is, I can't remember the last time I came out of an Easter weekend without strategy development. As in, I will be so clear of new things or where we are not doing well, that we need to change things and things like that. As an entrepreneur, you must be intentional like that. So when you do those things, so when you give time for strategy development, you will grow intentionally and to become a better position. Olumide, I hope we helped you with that. Yeah.
Okay, so then this question is just related back to outsourcing. You spoke about outsourcing certain services such as auditors and legal counsel. Are there any other individuals you feel that a small business can, just do away, not necessarily do away with, but can whose services they can outsource? And also, what is the importance of professionals like CFO to create financial strategies? For example, is a CFO the type of is somebody that creates financial strategies? Is that the kind of service that can also be outsourced, or is that a service you feel is important to have within the business?
Okay, thank you very much. One of the things we must bear in mind is that we're talking about SMEs. So when we're talking about SMEs, in fact, some of us cannot even, that word they are calling CFO is too big for us, because we can't even smell having a CFO in the first place. So the first place we even start from is, do we even have an accountant? So you said, I will start from, because you put two questions together. So the first question is, what are the roles that can be outsourced? In today's world, the question is, what role cannot be outsourced? It depends on how well you can manage those things, because one of the problems with outsourcing is that you need to still be able to keep up with those people and be sure that they are doing what they are meant to do. But if you're not going to be able to keep up with them, you will be wasting money totally at the end of the day. So you can outsource your accounting role, the bookkeeper stroke accountant. That is different from an auditor. And as much as possible, a lot of SMEs right now, they use the same person as their accountant and their auditor. The disadvantage of that is that it means you are most likely not going to do it until the end of the year when you are calling the auditor, by which time you cannot take strategic decision on your financial position again. So what I would suggest, if you can afford it, split the roles. Let the auditor be different from the accountant. Let the accountant be somebody that is reachable to you on an ongoing basis. Now, if you don't want to split the role, if it is cheaper for you, you can use your auditor as your accountant, but let him come in on a monthly basis to prepare accounts so that you can look at the accounts and they can interpret it for you. So that is your CFO in quotes. That accountant that is telling you on a monthly basis, your expenses is going high, and you're telling me, hey, what do you mean by that? And the person is breaking it down for you. That is the role of your accountant. It's different from the role of your auditor, who comes at the end of the year to do what we call an independent review of the accounts. You see why they should not be one and the same person. But if you are using one and the same person, then go ahead and ensure that the auditor gives you monthly position on the performance of your company so that you can use it. You can even outsource your human resource role. You can. In fact, we contemplated it last year before we decided that no, let's just have somebody in-house for now. Now, sometimes there's a difference between human resource officer, that is the person that is doing the day-to-day management of the staffing, to human resource strategy. Now, if you get to the point where you want to have a strategy, somebody who is helping you with succession planning, you probably cannot afford somebody in-house that has that kind of skill. So you may want to outsource that role as well. It depends on your business. That's what will determine the kind of roles that you can, outsource. You can outsource the legal counsel, you can outsource lawyer, you can outsource tax consultants, and the whole lot of that. So all these professionals are very important. The CFO position is very, very important. So if you cannot afford it today, then as much as possible, try and see whether you can outsource it. And it doesn't have to be a CFO with a very great potential. It just has to be, or skill. That's not what, it's not potential, I mean skill. It's just somebody that at least can help you at your current level. As the business expands, as the business scales, then you will upgrade the people that you have taken for these roles, as it were. Thank you very much. Oyinda, over to you.
Sorry, I was muted. Okay, I'm just reading through another question that we have here is, how can a startup move forward when there are basic assets to acquire to ensure the ability to plan on scaling? Do you get a loan? How can seed funds be gotten for this first step?
All right, thank you very much. On that question, it's not totally clear, so I'm going to just try my best on it. What I mean by it's not clear, you're calling yourself a startup, but you are talking about acquiring basic assets that is required for scaling. So my first question is, have you started at all, or you have not started? If you haven't started, then it's a different thing from maybe you have started, but you are less than 2 years, because the two of you are on different levels. Now, how do you get seed funding? There are development finance institutions in Nigeria, like Bank of Industry, Nexim, that is a Nigerian Export-Import Bank. Then we have the Development Bank of Nigeria. These companies fund startups. They will fund you for equipment. So what you should get is what's it called? Your own working capital. They will give you a little bit of working capital, but nobody will fund your business if you don't have anything on ground. It's either you have something or you get what we call angel investors. Those are family and friends who would not mind to give you money to start, but you must have something. You must be starting with some level of equity, your own owner's contribution. So it's either you, if you know that on your own, what you have is the technical skills and you don't have capital, then go and look for an angel investor, an individual that can invest in the business, and you share ownership of the business with them. 100% of zero is zero. So don't be afraid of bringing other shareholders into your business. However, to do it, make sure you have a legal counsel so that you don't lose your business at the end of the day. As long as you take legal counsel and you're able to ensure that you are not cheated out of your business at some point, then you get the capital that you need to make it possible to get a loan from some of these other people. So it is not wrong to start your business with a loan, but make sure that you are getting what we call patient capital. Don't go and get hot money. Short-term loan. What you need at that particular point in time is a long-term loan. And Prime Minister is able to advise you even as you approach any of these development banks for financing. Oida, over to you.
Okay, so then I just have another question, and I think it's going to have to be our last question for the day, is that how can owners of small businesses, this is because scalability often has to do with economies of scale. How can owners of small businesses compare or compete with larger organizations who have the capacity for greater economies of scale? This is a question from the registration forms.
Can you please repeat the question so that I will hear it clearly?
Okay. Scalability often means economies of scale. How can owners of small businesses compare to larger organizations who have the capacity for greater economies of scale?
Okay, I understand now. All right, thank you very much. Let's not lie to ourselves. It's going to be difficult for us to get to where they are. So the first thing is for you to understand that they are not your competitors. In the industry, you must understand that there is what we call peer comparison. Identify the real people who are your competitors. So for instance, Olam, let's take Olam and let's take Twine Global. I can take Twine Global because they are customers, so they won't mind me using them as my case study. So let's say Olam is processing, I'm just saying for instance, I'm not saying they do. Let's say Olam is processing cashew. Twine Global is processing cashew. Twine Global and Olam, they are not on the same level, so they are not competitors. Twine Global must understand the fact that their own peers in the industry are smaller businesses like them. So the first thing is what the SMEs should concern themselves, because we keep looking at people that are bigger than you and the economies of scale that they already have, you're going to find a situation where you will be so worried that and depressed that you won't even want to bother. You won't even want to bother. So it is best for you to understand your own level. Get contracts that are on your own level. Don't go and get contracts that you cannot execute. So that is the first thing. So make sure that you understand your level. And all you're just trying to do is that on your own level, be efficient. Don't break your promises. And when you begin to do these smaller ones, you find out that you get the opportunity as the time goes on to do bigger transactions. For instance, financial institutions, if they want to give you $2 million, what they are looking for is that the sales that you have you done up to that $2 million or $3 million? Then they know that if they give you $2 million, your sales will go to maybe $5 million or $6 million. But if you have not done $2 million, they will not give you $2 million. But if they are trying to give you $2 million, you can be rest assured that they are trying to give Olam maybe $20 million or $30 million. So that's why I don't want SMEs to allow that to stop them. Another way of achieving economies of scale is by collaborations. I think this is one area where a lot of us in Nigeria as SMEs, we shoot ourselves in the leg. If you have an opportunity to meet like minds, that's why we're saying we encourage B2B in Pearl Mutual. On this platform, please, people have put what they do. If you know any of them, you can inbox them now. You can send a personal message to them, a private message to them to give you their details, or you can reach out to us to give you their details so that you can collaborate with them. If, for instance, you get the opportunity to get maybe a contract to do 10 tons and you only have capacity for 5 tons, is there any other SME that you know that can also use their own factory for you and they can do the remaining 5 tons? And at the end of the day, you give them something on that. That means you won't earn the full income on the 10 tons, but you'll be earning more than that 5 tons that you actually have capacity for. I think that's one of the things that we need to really explore as SMEs in Nigeria to improve our capacity and be able to compete better with the what's it called? The bigger organizations. Thank you. Over to you. I think there's someone raising their hand.
Yes, we do have a raised hand here from one of our participants. If you could please unmute yourself, you're welcome to make your comment.
Okay. You are still muted, sir. Can you unmute yourself?
Okay. Can you hear me now?
Yes, sir. We can hear you.
Okay. My name is Anugbaba Sylvester Ebodare.